Hey, Bowtie Nation, Joseph Hogue here. Thank you for coming into another live stream Sunday, another Beer Money Sunday. I've got mine. I hope you got yours from wherever you're at in the world, adult beverage or otherwise. See some of the longtime members, longtime citizens of the Bowtie Nation there in the chat. Let me know where you're coming from. I see Maryland, Colorado. Great to see everybody here every weekend. Just a chance to relax, take off the tie and really just kind of talk with you about investing in the markets and see if we can make a little bit of money. So thank you for being here again. Got a great episode for you here today. Because we've really been seeing a lot of investor disappointment, after that February drop off and actually a big drop off in interest. Investors realizing that you can't make 100% a week or 100% a month even, and some of these most popular stocks and funds and stuff are coming down, and a lot of people I feel like are dropping out of the market, and that is not the way you win the stock market game, folks. Okay, honestly. I'm going to share some ideas with you here today that are going to keep you interested in the stock market, in investing. Doesn't necessarily mean you have to be looking at your portfolio every day or trying to pick stocks every day or anything, but it just keeps you motivated, keeps you engaged in investing, and it's going to grow your portfolio over time, right? It just takes constant investing, every month. So I wanted to share some tricks to keep yourself motivated to invest. Again, thank you for being here. Actually, a huge milestone this week that was really awesome. Past 400,000 people here in the community, here in the Bowtie Nation. So thank you for that. I love to see every one of you here in the live stream, as well as just engaging with the videos in the comments and that. So it's really motivating to me, and thank you again. If you're not subscribed, go ahead and click the subscribe button. It's free, and like I say, you'll never miss an episode. Thank you for that. Share the videos if you can. If you know someone else that wants to really take control of their financial future and get started there. So we're going to be covering that topic today. Also going to be doing question and answer at the end. Really, my favorite part of the live streams every week is just kind of talking back and forth with you and getting to it. So again, thanks. Last week, if you didn't catch them, we did a penny stocks video on Wednesday. Actually, penny stocks that I'd recommended in the past that were still below the initial recommendation, and if I'm still investing. So I actually highlighted some of those penny stocks that have been a little disappointing, but I still like that long-term outlook as well as the strategy that I'm using in those. Friday, we looked at the highest yielding stocks in the stock market, and I feel like there was some confusion here, so I want to clarify this and clarify that up. Is that just because a stock has the highest yield, has the highest dividend yield, and we those 5 stocks or 7 stocks on Friday, those were averaging 20% dividend yields or higher. Doesn't necessarily mean you want to rush out to invest in them. Okay, I wanted to highlight these just because they're the highest yields in the market, and I know a lot of people are attracted to that. But I also wanted to get that warning out there that a lot of these, they're primed for a dividend cut, or the share price goes down, because they're not saving enough back for growth. Or, that dividend yield is just very high, just by a factor of the stock price coming down, right? So dividend divided by stock is the yield. So if the stock price comes down and the dividend hasn't come down yet, then the yield's going to be higher. So I really wanted to highlight those risks and those warnings for you in those. Now, some of those are some great stocks that I actually own in my own portfolio, but some of them you got to do your own research. You got to check that stock price chart and stuff and the payout ratio to make sure that they can sustain those yields. But great video there. Great video. Check that out from Friday. This week, we've got NFT stocks coming up tomorrow. And this was another one that I wanted to highlight because I know a lot of people are interested in this NFT craze, right? The non-fungible tokens and how fast these are becoming a legitimate investments. And are going to be, drawn into those NFT related stocks. So I wanted to highlight those in tomorrow's video, Monday's video, and how to look for those companies and the ones to avoid, because there really are a lot of companies that are getting caught up into the NFT related stock trend, but really don't have much of a relationship, right? That's basically just a rumor that maybe there'll be an NFT stock someday, maybe not, and that's really driven the stock price up. So these things you got to be worried about, or you got to avoid with that. Wednesday we're going to be doing a hedge funds video, which is going to be really interesting, sharing a lot of the strategies and concepts that those hedge funds use to make money. So check those out. I want to get to our topic today, though, because like I said, we've seen a huge drop off in investor interest over the last 2 months as some of those high flying tech stocks, the high PE growth stocks have come down. A lot of investors disappointed, frustrated that they're not making that, 60, 70% return every month. They're not making the 700% return like they did last year in Tesla. So, they've dropped out of the market and things like that. And again, that's really not how to beat the stock market game. Okay. As an example, we've seen Robinhood trading volume down about 35% from January, and it's similar on other platforms. So you can't necessarily just say it's because people are fed up with Robinhood and some of the things that have been going wrong on the platform over the past couple of months. It's across all of the brokerage platforms, about 35% trading volume down. Actually seen it with Google Trends as well, and a lot of you might not be familiar with Google Trends. It's just a tool that I use to kind of gauge interest in different keywords. And what this shows is the volume of search, people searching on Google for different search terms, right? So I've got stock market in here. Anybody searching for the stock market, you can kind of follow that trend, see how investors are really interested in the stock market and stocks and things like that. And this is relative. So you've got, over the past 12 months, investors were searching for the stock market, and you see little bumps here and there. And then, of course, in January, when everyone was getting rich on GameStop, then it hit its peak over the last year. It hit 100. So that was really the peak of the last year in January, and then it's just really crashed back down to normal levels right around here. It's hit right around 25 percentile here just recently. So I really want to focus on that idea of longer term investing, staying motivated, staying engaged in the stock market, and just really, giving it a longer term time horizon. We probably couldn't have kept up that January crazes pace with the stimulus checks and the lockdowns and those booming meme stocks forever. But investing doesn't need to be something. It's not necessarily something you have to do every single day or week or month, but I do want to keep you engaged in the stock market and thinking about that at least every quarter, right? Maybe you have your direct deposit set up so you direct deposit some of your check into stocks every month. And doesn't necessarily you need to buy anything, but just keep putting money into your stock, into your account, and then buying every 2 or every 3 months. But the idea here is that you don't have to spend lots of time dedicated to stocks or the research, but just investing regularly, because that really becomes an amazing thing with consistent investing, compounding interest. I want to show you another chart that just to kind of prove the point. Netflix was easily the hottest stock over really the 2000s. I think it did something like 4,000%, right? Which is 40 times your money over the period from 2000 to 2010. And it's really just, expanded since then. Didn't do so well over the last quarter. The subscriber numbers kind of disappointed there, and the stock has come down a little bit. But just as an example here, if you invested $1,000 in the Netflix IPO in 2002, $1,000 then never invested anything after that, you'd have about $500,000, which is a pretty damn good, pretty darn good investment return over 21 years, right, or 19 years. Less than 2 decades, you would have had 549 times your investment. But the thing is, a lot of people, they don't have $1,000 to invest all in one stock all at once. Maybe, obviously in 2002, who knew about Netflix? Who had heard about Netflix? And nobody was using it, right? So it's still very much high risk stock there. But if you had 549,000 over that period, but what's even more amazing about this and this idea of just this long-term investing, just keep engaged in the market, keep investing even at $50 a month. Okay, if you had started there in 2002 when Netflix IPO'd and just invested $50 a month in it, right? A fraction of that $1,000 investment, You wouldn't have had all your money wrapped up into one stock, so it's a little less risky. But $50 a month over that same period, you'd have $1.1 million. Okay, so twice what you would have had with that one-time $1,000 investment for taking all that risk with so much money. And it's really the idea of that slow and steady approach to investing. Okay, treating your investment account as really just a savings account with an amazing return. Okay, so that's really what I want to do today is give you some ideas for staying motivated to invest, investing every month, a little bit every month, and just letting it play out and make you rich. Right. So I've got three ideas here to really make you, keep you engaged, keep you motivated to invest. And one really is just, have that diversification that we talk about a lot in the markets. And I know this isn't sexy like picking stocks or beating the market or anything like that, but just, having some ETFs that cover the themes you want to be in, having an ETF for dividends, for growth stocks, for some of these other assets, having some bonds and real estate in your portfolio. And really this is just so you don't get destroyed with that one theme. Okay, I know a lot of investors, folks, and a lot of people here in the nation as well, and it just killed me to see it. But over this last couple of months, a lot of investors that were exclusively in Tesla or the ARK funds, maybe that ARK-K Innovation Fund, or some of these high growth stocks that had done so well last year. But they had all their money in that, 100% of their money in that. And then over this last couple of months, they're down like 30 or 40%, and even after the rebound that we've seen over the last couple of weeks, they're still down some pretty big money, and it can just be frustrating, disappointing to see that your portfolio is going nowhere but down. You feel like you're wasting your time. And so you get disappointed, and you end up not even wanting to look at your portfolio or just taking your money out and and spending it, because why invest your money if it's not going anywhere? So I just doesn't mean you can't have some of these high growth funds, high growth stocks and things like that, but just have something set aside in some other stuff, other funds, dividend funds, the S&P 500, the index, the bonds, real estate, things like that. Okay. Also, a really interesting idea that I've been thinking about lately, and something I'm actually developing for another video, is just consciously planning it out to have that motivation, that enthusiasm, or that those stocks or funds that are going to motivate you. So this comes from two things that I'm thinking of right here. Have some high growth stocks and high growth funds in your portfolio, and some monthly dividend stocks or some regular dividend stocks in your portfolio. Okay. And I know, maybe you're not that enthusiastic about dividend funds, or maybe you have a little bit lower risk tolerance, so you don't want a lot of high growth stocks. But just having some in these, maybe one high growth fund like the ARK-K, that ARK Innovation Fund, ticker ARKK, and maybe Teladoc, which is a real good one, or Salesforce.com, or PayPal, or some of these high growth stocks that do grow their share price fairly quickly and fairly consistently. And then having maybe one dividend fund, like maybe the SPHD, I think is a popular one. Maybe the Charles Schwab fund, maybe the VIG, which is probably one of my favorites. That dividend appreciation fund by Vanguard. Again, that's ticker VIG. And then some dividend stocks, right? So either maybe Chevron, which is CVX, or if you don't like oil stocks, and then lots of other dividend stocks out there. But anyway, just having maybe one growth fund and one growth stock, and one dividend fund and one dividend stock. And basically what this is going to do is going to give you that consistent and constant encouragement for your portfolio, right? Either through that rising value or through the dividend payments. Okay, if you've got a monthly dividend fund and a monthly dividend stock, you're never much more than 2 or maybe even 3 weeks at the most from seeing a dividend payment pop up in your portfolio, right? And that can be just enough motivation that you need to keep engaged and keep investing, keep putting that money in your account, right? When the growth stocks are doing well, obviously you're going to get huge motivation, lots of motivation from that, because you're going to see your portfolio value grow, right? How motivating for those of you in Tesla last year, or in the ARK-K fund, or a lot of the ARK funds, how motivating was it to watch your investments go up so fast and so far? You thought you were going to be rich, right? Now, that's not necessarily trying to beat the market and get super rich off of these because maybe you only have a portion of your portfolio in these, because you do want to still have that diversification with those bonds and real estate and other themes. But it is still, it's just that motivation that you need to even when one theme isn't working, or maybe those growth stocks have cooled off a little bit, you're still getting the encouragement, you're still getting the motivation from the dividend stocks and things like that. So it's all about really getting that dopamine rush, right? That you get from seeing that portfolio, that dividend check hit your portfolio, or from seeing your portfolio increase in value from those growth stocks. It's all about getting that dopamine rush to keep you engaged, logging into your account, not avoiding it, like I know a lot of investors are doing right now. Third thing right now, third idea to stay motivated in your accounts, and then we'll get to the Q&A section. Just having a mental picture around your goals. Okay, I know a lot of investors out there. You want to have $1 million by retire, or you want to make $1 million in your investments by over the next 5 or 10 years. Right, get rich and get out. Okay, something like that. But is that really that motivating? Okay, it's just a number. It's some arbitrary number that you've really probably picked out of your ass or something, right? That doesn't mean anything, okay? And so that's not that motivating when you think about it. What you want really to keep that motivation, and this is one of the best, one of the things I recommend in my investing course, right, is one of the first things is creating that mental picture around your goals, and make this so specific. Make this as specific as possible. Make it actually kind of like a story in your head, right? When you reach that goal, what are you going to be doing on a daily basis? Who are the people around you? What are their lives going to be like? What's your life going to be like? Every little detail. Basically, you're just making a movie in your head about what your life is going to be like when you reach this goal. And you can even develop that movie, right? Develop that story all the way to that point. So build in times when you're going to have an emergency expense and it's going to be frustrating, or there's going to be a stock market crash and you're going to see your portfolio value come down a little bit, and it's going to be disappointing, it's going to be frustrating, and it's going to be hard, but you push through that, right? So like any good movie superhero, you push through that hard times and you finally get to your goal. And then what's your life going to be like after that, right? What's all the rainbows and unicorns that you're going to have in your life after that, right? And what this does is that, when you do get to those hard times, when you do see your portfolio come down a little bit in a stock market crash, or savings gets tough, then you just pull out that movie, pull out that mental picture and use it to motivate you to keep going towards your goal, right? You've got that movie that you can replay in your head, that mental picture, and it's just going to motivate you to keep on investing that $50 or $100 a month. It doesn't have to be thousands of dollars a month to really reach those goals. As we saw with that Netflix example, $50 a month, in the right stock, of course, but $50 a month would have made you a millionaire over that 19 years. Okay. You don't have to get lucky and pick the next Netflix. If you did $250 a month, right, which is achievable, which is doable for anyone out there, that's 5 stocks. 5 stocks you could do $50 a month in. If even one of those is the next Netflix, then you've got your millionaire payout in 19 years. Who knows what else you can get to with those, but just a modest rate of return on your investments, investing every single month, and you're going to get there. And this is how you do that. You have to get there with that mental picture, always staying committed, always staying engaged in the market. So would love to hear your other ideas for staying motivated in the in the stock market, always being engaged in the market. There in the chat or in the comments below. I want to turn this over into the Q&A section, because again, this is my favorite part of the live stream every week, is just going back and forth and engaging with you and seeing your questions.